But a lot of it comes down to negotiation, trends, interest, mandates from the portfolios. It's not just evaluation, so not just a numbers game is what I mean.
Hello and welcome to Random VC, where we discuss topics about startups, innovation, technology, and investments. I'm your host, Maria Halasz, and I would like to thank our sponsors, Stride Equity, a venture-backed equity crowdfunding platform, and the Nudge Group. My guest today is Tara Speranza, one of the very few female VCs in Australia. Welcome, Tara.
Thanks, Maria.
Well, I'm going to give a little bit of an intro, but I really want you to tell us all about your background and how did you end up in VC? How about that?
Yeah, sure.
But I want to know that your background is in academia, and not just academia, you also were participating in commercializing technology with a pharma group in France. And then you transitioned into investment banking as an analyst, and now you're in venture capital.
Yeah, that's right.
Is that right?
That is right. That's a very succinct way of putting it, yeah.
So tell us a little bit about how did you become a scientist first, and what was your PhD on, and just very quickly give us the picture.
Yeah, sure. So I chose very early on to be a scientist. So I was what you would consider a molecular biologist, but really that's such a broad term. And my research during my honours and PhD years and beyond was looking at novel molecular targets for, in particular, endocrine-controlled disorders of the musculoskeletal system. So the big one, obviously, being osteoporosis. Right. Yeah, so I did a degree in Bachelor of Medical Science and went through and did honours with my supervisor, Professor Rebecca Mason, who is still very much one of my amazing mentors. And we worked together on looking at ways to target, in particular, the calcium sensing receptor in bone. So we know about this receptor in the parathyroid gland, and it really helps us control calcium levels in the body by increasing uptake from the gut, from our diet, or if needed, to take it from our bones. But a lot of work had not then, to that date, been done on how to activate that receptor in the bone cells themselves to improve reduce bone turnover and improve the volume of our bones, how much calcium and hydroxyapatite, that mineral crystal, was being laid down in the bones. So we were sort of throwing a number of divalent and trivalent cations, so a number of atoms or elements at the receptor that we knew bound to the receptor, just on isolated bone cells to see which ones sort of stimulated their proliferation and their ability to lay down collagen and stimulate calcification of the bones. And we found that the one that did the best was strontium, and I don't mean radioactive strontium.
Yeah, I was just about to say that sounds a bit dangerous.
No. So, not the radioactive, the very stable strontium. And, we used to use it in a salt with chloride. So, you know of sodium chloride that we use in table salt, but this is strontium chloride. So as simple as that, really. And it worked really well. And we were approached by a pharmaceutical company. So I did that through my honours year and then into the start of my PhD. And with some of that work, we were approached by that French pharmaceutical company you mentioned, Servier. And they were actually working on something very similar, and they had gaps in their research that we were seeming to fill. And so they approached us and we started working with them to develop what we know as strontium ranolate, which is another very simple salt, a little bit more complicated than strontium chloride, but very easily digested oral formulation of two strontium atoms given to the body in each version of the molecule. So it worked really well to increase bone strength in women with osteoporosis who didn't respond to the available drugs at the time.
So I think this is really important, because not just that you were a scientist, but you actually had an exposure into how to commercialize that science. Essentially, although it sounds very complicated, because obviously biologics is not simple, but at the end of the day, you had a startup within the university where you had a technology and then it had to be taken to the market.
Yeah, that's right. And I wouldn't go as far to say that it was a startup, but because what happened back then, so this is in the early 2000s, what happened back then is Servier came to us and they knew what they were doing, but we didn't know what we were doing. And I would say...
They took it from you.
Yeah, they pillaged.
As they would have done, yes. Yeah. Look, I'm just using the word startup, not so much that it was a formalized company, but it was something that you could take it to the market as a project more than a commercial entity.
That's right, exactly.
So you've done that for quite a while, but then you decided to go into investment banking and you became a financial analyst with one of the banks. Tell us, how did that come about?
Yeah, an equities analyst. So I always played on the stock market, and I do mean play. There was nothing super serious, but I played with a little bit of my own money and have done for a very long time in the biotech space on the ASX. So I would follow all the companies on the ASX that were biotech or biotech related, healthcare related, and I deep dive into their science, their people, and their projected futures, their markets, in the same way that an analyst would. The only thing I was missing was the actual financial modelling. So I wasn't at that time capable of predicting exactly what a target price for any particular company might be, but I had the rest of it. And after COVID, I made a decision to leave academia because as when you're employed as an academic at a university like where I was at University of Sydney, I ran the laboratory, which was my passion, the research, but I had to teach. Now, it's not to say I didn't like teaching, but boy, did it take over my time and my headspace. By the end, I felt like I was doing teaching a lot more than research. And I just looked around and said to myself, I have no problem with teaching, but is this what I wanted to do when I was 18 and I made that decision? And the answer was really no. And I feel guilty saying it because I loved the students. I did love teaching. You know, I loved it when you could see them understand an idea. There's nothing more rewarding. But that didn't mean it was my choice. So I thought about what else I could do. And the other thing that COVID did was it made it very difficult, of course, for many people to be in a laboratory at the time. And so I felt like my laboratory kind of lost its memento. Right. So it really slowed down. And to get that up and running again felt like more of an effort than I was prepared to make while I was still doing all of those hours of teaching. Right. So I made a decision that at the time I'd just turned 40 and, this, if not now, then when, and would I ever change careers? So I just made the leap and I began an MBA and focused on finance over at UNSW at AGSM. And I also made this big effort to reach out using my networks. And through that process, I ended up with a job as an equities analyst at a securities firm focused purely on biotech and healthcare companies.
Biotechnology, yes. Yeah. And I think, you mentioned COVID. Yeah. And I want to get back to that a little bit in a little while, because I think it's really interesting how COVID transformed so many aspects of our world. Yes. And of course, you're talking about academia, but when you look at the biotechnology industry, it's boosted it out of sight. And, I was just looking at the numbers in Australia. Between 2019 and today, there's 43% increase in biotechnology companies. Yeah. So there was an additional 1,200 companies added to the biotechnology ecosystem within that 4 years. Yeah. So we now have 2,500. So it's like an enormous growth. Yeah. And obviously that was driven very much by COVID. But, maybe we can have that conversation in a moment. I do want you to tell us a little bit about how, from an equities analyst, and what, the broad exposure to really looking at valuation of these early stage companies, how that then shifted into, from sell side to buy side, and you went into funds management in a venture fund.
Yeah, so obviously when you're an equities analyst, you have what you call clients. These tend to be institutional investors, and one of those clients ended up. It was quite a new fund. They were a client, and I used to talk to them about my coverage. So the companies that I covered listed on the ASX. And actually, the majority of their portfolio wasn't listed companies; it was private, so venture capital. And basically they came in for the poach.
Yes.
So they were
that
really...
was 10 Mile.
That was 10 Mile, yeah. So it was a great place to work. So I moved over to them, and I did still work with them on listed companies, but what I really did was go on the hunt for much earlier stage companies. We reached out to universities, and we spoke to other venture capital firms in the space, which was a lot of fun. I really enjoyed the sort of collaborative nature of venture capital, and I also enjoyed that going in slightly earlier when valuations are something, we can talk about that in a second if you want, but valuations are something that we can quantify the company, certainly, but a lot of it comes down to negotiation, trends, interest, mandates from the portfolios. It's not just a valuation, so not just a numbers game is what I mean. And so at that stage, what you really want to get your head around is the science, and that's what I obviously was, had sort of deep knowledge in. And
hence, you got connected with the Stride Equity, and now you're a venture partner at Stride Equity, and an investor as well in the firm.
Yeah.
So I think that's an amazing journey. But you started to talk about valuation because you are one of the preeminent experts in value in early stage companies in Australia. I don't want to move past without getting your view and some cornerstone topics around valuation. The first thing I want you to tell us a little bit about, how do you look at valuation? What kind of methodologies do you look at, and what is appropriate for what kind of companies?
Yeah, first of all, I'm going to say you're way too generous, Maria.
Not at all.
Yeah, anyway, I'll just answer the question and brush over that part. The one thing that as you know about me, Maria, one thing I really like to do is to come up with a net present value using a discount cash flow. Now, when we talk about really early companies, obviously that may not seem appropriate, but I would always advise a founder or a team of founders to prepare a DCF, not because it may lead their valuation, their final valuation, but because it gives them a real deep dive into their own company. It projects, most importantly, their expenses. And this is something that I think a lot of very early stage companies miss. And I think running a proper cash flow, a detailed cash flow, is not, use zero for your actuals. That's fine at that stage, no problem. I understand that. But I'm talking about projections into the future. So really understand where your pain points for expenses are going to come from.
Right.
That's just, revenues is easy and everyone over projects their revenues. So we can, I will always be pulling those down a little bit, or at least pulling down their penetration into whatever market they're after. Pull those down a bit, but really go for gold in terms of expenses, because this is where a lot of companies trip up. Need to go looking for money when they probably shouldn't be. They're too early. They should hit a few more milestones before they go out looking for money. And a lot of the reason they do this is because they're not aware of their detailed upcoming expenses. And so I think that, for these reasons, I would always say try and do a discount cash flow.
Yeah. And of course, we always underestimate the cost and the time that it will take to get from A to B in a company, and we see that over and again. Yeah. Just on your comment about mostly we overestimate our revenues. Yeah. The other day I was at a presentation and they presented Prop Heroes numbers, and apparently everybody was celebrating because in Australia that's the first time any investor saw a company that actually outperformed
their revenue projections.
And that was like such an outlier.
Tick, tick.
Tick, tick. Sure.
So good.
Yeah, so returning to your methodology and reason, I get it completely what you're saying, and I think it also allows companies to really drill down into where those expenses will come from, because how much it might be, you may not be able to put your finger on exactly, but then where is it going to come from? What are the components that add up to them? So I assume that's what you mean when you say drill down into the details around what your expenses are.
Exactly. Now, the other thing that comes up is, how do I discount? What's the number or the percentage that I discount my cash flow on? So for a company that's got some traction, customers perhaps, if it's that kind of company, we can probably go to the ASX and find a similar company and calculate their discount or their weighted average cost of capital using the same beta as a company that's very comparable. And I did that yesterday with one of the companies from the Stride cohort we can talk about later. And we found a company that we both agreed wholeheartedly was a very good comparable. So that may not always be the case, but what we can do is look at how far away they are from a situation like that and increase the risk. And so by doing that, we're really tying the high risk values of these early stage companies with no traction to the way we discount their cash flow. So, a company that's very, very early, we'd want to be looking at discounts up at the 35%.
Of course.
And then we can start to bring those down only when we can see some real risk mitigation strategies in place and functioning, or some other traction. Yeah.
And, it's kind of logical, because when you think, is it a binary outcome? I may or may not get there. I've got 50-50 chance. Then the discount factor will be 50%. So it makes sense that you use a pretty high discount factor when it comes to pretty uncertain outcomes. So I think that's quite clear. I think the other thing that I look at valuations, and of course, your company at that stage is worth what the market is prepared to pay for it. Yeah. But then I think the message here is that doesn't mean that you shouldn't be looking into all the components that make up that valuation, because the more educated you are when you go and negotiate an investment into your company about the valuation, the more chances that you've got that you're actually going to secure a good deal.
Something that you're happy with. So exactly, taking the words right out of my mouth, what I say is the more knowledge you have about the way your company functions and the projections that you have about your company and where the pain points are and where the good points are, the more power you have when you go into that negotiation.
Absolutely. I want to take you back to biotech, because I want to use that opportunity, given that you're such an expert in the area and you've seen all the companies, certainly the listed companies on the market. Now, I just looked at some of the recent capital raisings in the US, and there is absolute mega deals. Like there's more than 50 companies raised, over 100 million each in the US this year, private.
I know.
One of them, preclinical, raised more than $1 billion.
Xaria?
Xaria. And I'm just thinking, incredible. It's almost better than 2021. It's almost driving to that. And then for some of them already started the IPO. The IPO is still in form, I think, in the US even. But let's bring it back to Australia. What's the situation in Australia? If I'm a biotech startup and private company in Australia, what options do I have to fund my company?
Well, I think actually that the situation is a little bit better than it used to be. So we've got some, there are some pure play biotech firms on the market, portfolios, and, there are some bigger and some medium-sized ones that are well established, and then we've got some new ones. We mentioned that I was with 10 Mile last year, and they're a good example of a new company with some good expertise in their team, which is really useful. And I think there's a few more like that coming about at the moment in the last few years. So we've seen a couple go from listed to private and open up their private a little bit more, given what happened from 2022 onwards in the listed space. We've seen a lot of firms or portfolios open up to the private space that didn't really used to do that. So I think that overall the pie has gotten a little bit bigger, but let's be honest, we just don't have the kind of cash that they have over in the US. We don't have a lot of the expertise that they have over in the US, although, as I've just said, it's growing, which is really good. And we see now a lot more groups of angel investors that are also available. And I think that there's some interest from high net worths and family offices that didn't used to be available. And I would credit deals like Xaria, Verge was another one, that are really tapping into people's curiosity about AI, robotics, things that cross the tech and biotech space. So a lot of people don't understand how a molecule works, how a drug works. They'll know the name of the drug, but they're not really aware of how it got from the lab to the bed, from bench to bedside. And so it doesn't pique their interest. But when you start explaining that they use AI to develop their technology to speed up the process of getting from bench to bedside, using robotics, we're suddenly grabbing the interest of people that didn't used to be interested in how molecules work. And I think this really helps. But as I said, it's still a closed pie, and there are some serious limitations. And what makes it difficult for Aussie biotechs is that it is not easy to get backing from the US or Europe. And the reason for this is, Americans speak American, and, I love it over there, and I think the ecosystem is fabulous, and boy, do I wish we had something similar. But I think we're going in that direction. But, 380 million people to 27 million people, you can't expect that it's going to be the same. But I think sticking with growth trajectories is a really good idea. And I think it's worth being optimistic as well, which I am. IP coming out of Australia, that's mind-blowing. But it's just that getting from IP to commercialisation is something that's a bit more difficult. So we talked about Servier approaching me. That's the only real way that I have seen big pharma jumping on board. We've had some successes, from Australia recently, Telix, Neuron, this sort of thing, but they're not always that the IP came from Australia and then made it all the way. So we've got, they've sort of purchased IP from outside of Australia, and then an Australian company has gone ahead and developed it and partnered, or in Telix's case, they haven't necessarily partnered. In fact, they're doing acquisitions. And so I think that's great, and we want to see more of that. But boy, would it be good to see the whole journey occur from an Australian group.
Absolutely. I mean, I was talking yesterday with the original CFO of CSL when they listed that from a government organization or research kind of organization into a listed company. Yeah. And I think they listed it at $2 or $2.50.
Oh, wow.
And then they split the shares 3 times. So, I know. And, they all got some initial shares. And, unsurprisingly, he hasn't been working for many, many years. Because CSL shares are hitting $300 now.
Yeah.
But I think, and I asked him, do you see a CSL on the market? And he said, there are some budding potential CSLs on the market, but because of all the reasons that the restrictions within our size of the market, it's going to have to be, firstly, one of the top 4 areas of medical research or pharmaceutical focus, and then it's going to be something that is going to go global and operates globally very soon.
Yeah. And I think input from big pharma is probably necessary too. That's a very big ask. Partnering with mid-size pharma, external, outside of Australia is also great. But I think we'll see that mostly with rare diseases and, much smaller market sizes.
Absolutely.
I don't think the capability to go for, the big disease areas we have that here just yet. But I don't mean to sound pessimistic. I'm definitely not. I'm purely optimistic when it comes to biotech and Australian biotech as well. I want to see it work, and I fully support it. And I hope that more people come on board, and I hope that more people start to understand the time frame for biotech. So unlike a lot of other sectors in the market, biotech development takes so long, and so a lot of investors sort of want much faster upsides, and this is just something that can't happen. We don't want to push and rush science. Look what happens when we do that. Looking at you, Cassava, Theranos,
Exactly. So, but I mean, but you mentioned AI and AI's importance in drug development, and we see groups like in silico medicine where the entire target discovery, candidate development, testing, taking it through to phase 1. It's gone from 15 years to 18 months.
Yeah.
So this kind of AI actually is going to, in my belief, impact enormously the cost. So, and I think that might give us an opportunity to hit harder as far as Australia is concerned in terms of the therapeutic development. But look, I'm like you, very optimistic. I mean, we see new groups like Protoaxiom emerging.
That's another good one.
They're fantastic and supporting really early stage. It's sometimes out of universities, which is fantastic. Then you've got the UNSW founders, again, early stage funding support for companies. So I'm with you, and I agree with you, and I have tremendous belief in the sector. And of course, Brendan just raised $270 million,
which is fabulous.
Our largest VC in the sector. So that's all very promising. I'm almost ready to move off biotech now and start talking to you about a little bit about some of our random questions which we throw at our guests periodically.
Okay. If I can.
So we talked about a little bit of you as a scientist and your early career, but going back a little bit further in your childhood. Give me the most wonderful childhood memory that you have.
When people ask me this question, I always think about family holidays. So I'm one of 4 children. I have 3 brothers. So I'm the only daughter in the family. And my parents used to take us on these mad driving holidays, road trips around Australia. So we did everything. We did the Simpson Desert. We went to Cape York. We went around Uluru. Everywhere, you name it. Put the car on the back of the Garn and caught the train from Alice Springs to Port Augusta. Which was all fantastic. And I think I don't remember exactly how boring it got or how sweaty and stinky my brothers were. What I do remember, though, is it's probably not good, but it's certainly funny, this is the 80s that I'm talking about. But whoever got stuck in the seat behind Dad's driving seat with the windows open would always get his cigarette ash fly from his window through to our window, and we'd be like, "Oh, Dad!" And he'd say, "Just rub it, you'll be fine." So 80s.
So
driving through the Simpson Desert with my dad ashing out the window.
Look, the other thing that I'm thinking about, and I really want to quiz you a little bit, is that you actually are teaching a course on Sprint, which is an investment-ready program run by Stride Equity. And so out of the 8-week program, you do a very strong session on valuations. You must have seen some really interesting companies. And how do you approach it? Because there's such a variety of founders who come to that course.
I love it because it gives me an opportunity to use all the skills that I have in valuation now. Talked about leaving academia without that particular skill, but I picked that up a lot along the way. But using it in companies outside of the biotech sector, which is fantastic. Some of the companies that have been on this Sprint program that I've been involved with, you, Maria, have just been so incredible. So a lot of them are tech-based, which I love. I absolutely love looking at founders that are using simple tech, or available tech to make our lives a bit easier, that find the pain points and simplify them with apps that, I never would have thought of, but I have that problem. So I don't know if you want me to name a couple or to describe
Well, if you feel comfortable naming some of your favorites, that would be wonderful.
Look, the Care app was the one that really stood out to me the most. This is the app that addresses the issue that we have when we put elderly relatives into care facilities as well as at home, and we don't have access to all of the information and a little bit like the apps we use for our kids at school, but even more involved, I think. And I just think that I can't believe nobody thought of that before,
And if they have, I looked at Care App myself because obviously they were part of the course, and it's such an impressive platform.
Isn't it? It's beautiful.
Very, very impressive platform. And I think Alison, the founder
Nicola,
and the team, they've just done an amazing job. And no wonder now they're rolling it out in the UK.
Yeah, the traction is really impressive as well.
So I mean, we see all these companies at a different stages, and of course, Alison's company Care App would be at a stage where it's probably ready for investment. And of course, our companies come to us because at some point in the future they'll be thinking about investment. Before I close, I want to have a couple of more questions around, so you went from academia to analyst, equities analyst to venture capital, and you're loving it. I can see that from the way you're talking about it. Where are you going to be in the next 5 years, in 5 years' time?
I think I'm really enjoying mentoring startup companies. So obviously that sort of puts me in the consulting direction, but I don't want to be a pure consultant. I think I'd like some hybrid of consulting and venture capital. I think that's exactly where I'm heading, into a hybrid role, consulting.
As an investor in early stage companies, you can't avoid but become a mentor. Because you just can't help but want to help.
Yeah, exactly.
It's so, and then the classic question of the 5 guests at a dinner party.
Yes.
Let's close with that one.
Okay, so 5 people I would invite to a dinner party. See, the problem I have with this question is that there are always going to be historical figures that I want to put in, but I want them to have an understanding of how the world works now. So I have all these caveats to my answer.
Oh, what? Do you want to serve them vegetarian?
No, we don't need to be vegetarian, but more that, they have to understand that women now have a vote and women now.
Right, so who amongst us wouldn't know that?
So people that I think are impressive that really changed the course of history, particularly in their own country, someone like Georges Danton or even Robespierre, although he got a bit brutal towards the end. But still, the fact is that their whole idea was, an overthrowing of the monarch and to give what they thought was all people the vote, but what they meant was white men. So the caveat is that now they have to open that up to all people,
So you're a bit of a revolutionary.
Yeah, no, I don't think I'm pretty centrist at the end of the day, but I'm glad we're all voting. Let's be clear. And I think I always say I'd need someone that's my partner in crime. So I feel like that's either you or someone like Eleanor Bonham Carter. So what I want from that person is worldly, witty, and warm.
Thank you so much for including me in that. I feel totally honoured.
So that's 2. I'd have someone like Deborah Harry, but again, can I put her back in? I've seen her recently, and she's probably not really interested in coming to a dinner party anymore. She's more reclusive. But back in the early 80s or late 70s, how she forged her way as a female punk rocker onto the stage at CBGB's and that sort of. I'd love to chat about that. I think...
and she could sing for us.
Yeah, totally. Yeah. But again, back in the late 70s, early 80s. And then Australian author Christos Tsiolkas is the other one. So most people know him as the author of Barracuda and The Slap, but the book that really got me bang in the heart was when he wrote Damascus. So he has a very similar background and cultural history to me in that we were brought up with pretty strict and very involved Catholic families. So I even went to an Opus Dei school. Now, I found it very hard to believe in the same things that I was being taught. That's fine. I don't want to talk about religion so much, except what I like about this book is it is very graphic and brutal, but it really explains how I think a lot of humans changed through the development of Christianity. So I don't want to talk about the specifics of any religion. I'm happy for people to believe whatever they want to believe, of course. But I like the way he poses this story about what happened when a particular man who claimed to be the Son of God came along and asked people to stop being so brutal to each other. And we all do that now. We're not as brutal. So obviously we can see brutality across the world. But I think a lot of us have been influenced, our history has been influenced by that particular point of Christianity, which, this is my family I'm talking about that brought me up in this religion and in Catholicism. And, I can't turn my back on that completely. And so what do I take from it? Just to be a little bit kinder,
Do you think as a society we are getting kinder?
Because
I mean, even in the hundreds, like when you're talking about looking back from the Middle Ages, do you think the society is becoming kinder?
So there are a lot of theories about whether or not this is true or not, and we can point to many specific events, particular wars, Holocaust, that suggest that that's not true at all. But I think that I think that I would like to know that those in my sphere and my realm are.
Right.
Yeah. And again, I want to use my optimism here. And I think, I would like to think that most people do the best they can for the most people.
Right.
But I don't know, Maria.
Well, Tara, thank you very much. This has really been a very random podcast. We have spoken about everything from startup valuation to investments to biotechnology to religion. Revolution. And we ended up with how brutal or not the society is. Yeah. So thank you so much for that wild tour.
My pleasure.
I look forward to having you perhaps again.
Thanks, Maria.